US market in particular with the FDIC rules, the Synapse rule as it's known, is really putting focus on that area. And it's bringing more light on the BIN sponsors in particular. They own the compliance side of things. So it's really about keeping the ecosystem healthy is the way that we're looking at it, is how do we support both the BIN sponsor as well as the program managers and issuers in that situation. So we're looking at how do we help assist them in what they need to do to run those programs and be compliant all along the way.
Thredd's secret sauce has always been our partnership with our clients. And so we're typically the first phone call that these forward-thinking fintechs are making is to us when they're thinking about, I want to go to the US. So, well, let's see what Thredd thinks. And it's because of those phone calls, because of those conversations that we've just put together our Launching in America guide to go into these details. Of course, no guide can tell you every single thing you need to do. And part of what the guide refers to is how important it is to have a partner that wakes up every day thinking about fraud, risk, compliance, the back office. And so I think that's why we're really seeing success with our clients who want to come to this market.
I like to frame it as it's protect and grow with our customers, right? So on the protect side, you look at all the fraud capabilities that a customer needs across the life cycle. So what we do is build out a suite of services that are going to be available to monitor transactions in real time, 3DS. We use AI from a modeling perspective to lower your false positives. We also provide managed risk services to help you, optimize your risk scores. And then we actually just launched Scam Detect, which is monitoring, transactions for scams in the A to A space. So we're really trying to cover across the gamut all the different places that fraud can occur.
Having people on the ground that really helps Thredd meet our clients where they are, literally and figuratively. That all of our clients being disruptors in the space are at different points in that journey. So it's combining both the protect aspect that Ava was talking about, the things you need to think about, with the need to keep growing as well, and that you can't, no program can have one or the other.
There's a ton of applications related to virtual cards and one-time use. We're definitely seeing growth in that area in our business. I think one example would be online travel agents, where they need to they're booking a trip for their clients and then they have to pay those vendors in another market. So using a virtual card to do that makes it faster, secure, and so it just makes their business that much easier to manage. We're here in Las Vegas. There's lots of opportunities from a gaming perspective for one-time, virtual use cards, and even plastic as well. BNPL, installment payments is another good example. So I think there's just going to be more and more applications around that. And you really are going to see the plastic, disappear more and more. You really don't need it to make the payment happen. And so making it invisible, I think, is part of the future.
Yep. And I would continue that to say that where we're seeing a lot of success are in the super apps. And integrating, what we would typically think of as a card transaction in that flow. So, across the APAC region with a number of clients that we're working with there to be able to enable their vision of, the app that does everything and bring the payments into it, and payments that work well in a cross-border situation.